Here we go. Here we go. This is going to be fun today. You are looking live. You are looking live at Rob and Maria Trading, live from the trading desk. Today is March 3rd. March 3rd, that's right. March 3rd, 2026. And we are trading live. The markets are down huge. You can see from the thing above me here, we talked to AI today. We talked to me today. And both of us agree, no zero DTEs today. Today, we're going to trade Crazy Ivan. This opportunity comes around 2, maybe 3 times a year, and we are all in on Crazy Ivans today. Let's take a look at the market and see what we're doing. This is going to be fantastic. All right, let's go over and take a look at the screen. This is my personal account, and you're going to be able to see exactly what I'm doing here. Notice that I've got a lot of cues on here. Let's close out this CLS. This is what Maria got me into the other day, which is fine. We're going to get out of that one eventually. So here's where we are. Is we're going to be trading Qs today, and I'm going to be taking a look at some MNQs if you want to do a little live scalping as well. But let's take a look, see what we do is the Crazy Ivan. For those of you that don't know what a Crazy Ivan is, a Crazy Ivan is when we're going to sell a 45 to 60 DTE NQ. That's what we're going to do. 45 DTE to 60 DTE NQ. We're going to sell it at 12 delta. All right. Then what we're going to do is we're going to let that come, let time pass, and we're going to close that at 25% profit. On average, these take about 14 days in order to pay off. We like to do them on down days, right? We love to do them on giant down days. That's what we absolutely love, and that's what we've got today, right? We also, if the market moves against us a bunch, then it gets within 250 points, we'll roll these down and out. This is a trade I've been doing for 6 years, and it's really paid all my bills, everything. The real reason I got into zero DTEs was because of the Crazy Ivans. So let's take a look at it. Because Crazy Ivans, by the way, I never use more than 30% of my buying power for Crazy Ivans. And the reason is that when the markets go really, really against you, they absolutely can go, your buying power can go up dramatically. So what can happen is, say you got 30% buying power in your Crazy Ivans and the market crashes down 1,000 points 3 days in a row, that can triple. So it can go from 30% to 90%. And we don't ever want to be put in a margin call situation. Worst thing is, hello, this is Tasty Trade, Schwab, or IBKR. We need $2 million, Rob, and you got 30 minutes to go. Never want to have that call again. Yeah. Ask me how I know. No, please don't ever ask me how I know. It was a nightmare. All right. We got 4 minutes till the market opens. Let's take a look, see where we are. And I see you guys in the chat room. This is a safe space here. Hello to Mario. Hello to Easy. Hello to RJL. Rob, can you please state that again? Sell what delta and how many DTE? Absolutely. This is what you get if you don't get here on time. No, I'm just kidding. So let's go through it, right? Let's go through it. The market's about ready to open. Let's establish we're going to be looking at the Qs today, right? And we want to be sure that we got this on the 1 minute chart. That's more fun than anything. Let me get this set up for you. If I had been a skilled host, I would have had this set up in advance, right? All right, so let's see where this is. Boom, boom, boom. All right, let's get this in here so we can see it. All right, this is where we are, right? And if you go back, and just by the way, if you just go back, we'll take a look at it. But if you go back, this has been, I mean, we have dropped dramatically, right? Look at this. This thing has gone down since 1 in the morning. And we'll talk about that in just a second. So we're getting ready for the open. We got 2.5 minutes to go. Let me just show you real quickly. What we're going to do is I'm going to go out 45 to 60 days. So I would go out to this 58 day right here, and I would go to 12 delta, right? So I'm looking at the deltas here, and I'm going to go over down to 12 delta, which is right. Looks like I put a couple on here last night. I'm going to go to 12 delta, which is, I like to go to the thousands or to the 250s, 500s, or 750s. So I would go ahead and put this on here. And what I would do is, I like when it says 220 here is the ask. Maria has taught me to go up for 2 more, so I would go ahead and put this in for 269. This is a trading show, so let's trade. I always put in a little bit extra for the dog, right? So that's the game plan there. And then I go ahead and and note that this is going to be 13 pardon me, $13,000 worth of buying power. And I'm going to get about $5,000 worth of premium. So I'll go ahead and send that order out there. And we're now in the market, or we were actually trying to get in the market. And you can see I put on a couple of these this morning. I've got one, a Crazy Ivan, at $270. I'm looking for and right now they're offering me $237. Here's $285. So notice $270, $285, $300. That's the game. And those were 21 250s I put on. Last night I put some on, and we'll go over what I did last night, but you get the general idea of where we are. So none of these are in the green. By the way, all of these were in the 40% yesterday. So I didn't follow my own rule. I got greedy, right? I got greedy. So I see some new people coming into the chat. If you have any questions, go ahead and put them in there. We've got about 30 seconds until the open. Let me make sure that I've got this set up okay, so that this doesn't blow us out with the audio. I'm very fearful about that. So it gets too loud. It drives me nuts. Okay, so here we go. Let's take a watch. Let's take a look at this thing and see exactly what's going on. You know what we ought to do? We ought to take a look at it the way Tyler does. He loves to look at it this way. We're going to look at, here we are, actually, when it's trading live. I don't know if we can get this on the screen. There it is. There it is. And here we go. This is a live trading screen. And this is how you can trade. If you want to trade active trades, this is how you can do it here. I'm going to take this off. This is MNQs, but it's the same thing, right? It's the exact same thing. Let's see. We got the NQs here. So we'll reload this. Hopefully we got a good stream. We've got a whole new studio that we just built. And so, okay, we've got, look at the volume. We got big volume here. We got things moving to the upside. I'm not going to scalp these, but, you know, doggone it, we're not going to get any fills here. You know, look what's happening here to our trades. These are at 232, now 223. So they're offering us less and less money. You know, look at that, skyrocketing to the top side. If you take a look at our positions here, what we were down 35,000, 37,000 or so. And this is just, you know, coming back, which is bad for us. Up there's CLS. That's Tyler and Maria are trading those, not me. So you're going to hear that in the background. We got a lot of traders in the family, and so we are going to see that. Why is it called a Crazy Ivan? All right. It's silly why it's called a Crazy Ivan. But I'll go ahead and go. Oh, look at this thing skyrocketing to the upside. You don't want to be any part. You don't want to be in front of this freight train. And by the way, this is why we do not trade zero DTEs on a day like today, right? Today like today is a news-driven day. Remember, our whole idea with zero DTEs is the herd is over here. We just want to trade over here. Herd is here. They're selling premium here. We want to sell where they aren't, right? Hit them where they ain't, as the guy used to say in baseball. So we hit them where they ain't. And the problem is, in a day like today, you want to, in multiple giant condors, you want to stay between the put in the call. And what happens is, it's not even news driven, it's rumor driven, right? Rumors drive, and it goes up and down, up and down. This is what would have happened yesterday. We back tested it. We would have been slaughtered yesterday, but we stayed out of it for just that reason. Well, look at this market. Look at this market going up or down. But the question is, why is it called a Crazy Ivan? And it comes from the movie The Hunt for Red October. And the Crazy Ivan is an idea in the submarine world where if you are a Russian submarine commander named Ivan, every half hour, you're going to violently move your submarine one way or the other. And then you look behind to see if you can see the American sub behind you because they're in your shadow and the sonar doesn't pick them up if they're right directly behind you. So you move quick. So it looks like he's crazy, right? But he's not crazy. He's very, very, very smart. Old Ivan, he's a thinker. He knows that by doing this, what appears to be a crazy move, you actually are going to be able to find out where your enemy is. And likewise, that's what this, where this came from. And this whole idea was built by Maria, where she said, geez, when there is a gigantic down move in the market, there's a real opportunity to trade these far out of the money puts. And that's the entire game. And so if you look at my personal account here, you can see that I've put on a bunch of these and I mark them. So in my account, 30% that I have allocated is about $1 million, right? That's about $1 million. And since they take $12,000 to $15,000 in buying power, let's call it in round numbers, 65 of them I can put on at any one time. And right now I've got 9, 13, what do I got here? 21, 22. So I've got 22 of them. So I can put on another 40, right? I don't like to put on more than 4 or 5 a day because if you got 60 of them, that's only 12 days and it takes 14 days. Even if you had, down, you want to always have enough of them that you can put them on. And when you start putting them on, right? Like when I started last night, let's see what I had here. So let's just look at the Qs only, right? Let's just look at Qs only in my thing up here. You can't really see that, can you? Let's see if I can give you a little bit more. I have to shrink this just a smidge. I want you to be able to see everything here. So there you go. Okay. So on Tasty, if you go up here and we'll go up here and switch it to just the Qs. So if you're just in the Qs here, you can see that last night I was getting ready. It's okay. First of all, let's go back 7 days. You can see I'm buying to close and then I'm selling to open. So I'm selling at, it looks like I was scalping some. I'm selling to open. These are not the options. These are the actual hardcore ones. So here I'm selling, I'm buying to close in the 90s or $100, 95. And then look, I'm selling to open for $200, $195, $220, $260. So that's what I was doing. And then I'm looking to sell more. But basically I'm selling to open at first, right? In the 200 to 200 plus range. If I get lucky, I mean, in a normal day, it's 150. And then I'm going to try and buy them back for $75 if they're 150 or actually 25%. So I'm going to try and buy them back for 125. But when you get this volatility goes way up, when the fear is way up, then, you're going to get a lot more money. So like today, I mean, look, the VIX is at 25. That's got to be up a huge percent, right? It's up. What is it? It's up $4. It's up. Look at that. It's up almost 20%. I mean, the herd is scared, right? The herd is scared. The herd is a bunch of deer. They got deer eyes open. They're their heads on a swivel. And when the herd is scared, they hear a little crick. They go running. And if you're trading zero DTEs, you are going to get killed, right? You are going to get killed because it's up and down, up and down. But if you're selling the naked puts, you're going to make money like who laid the rail. That's been my experience. So, okay. So what we're doing here, I mean, look, this dang thing keeps going up. And so they're killing us, right? The market's going the wrong way. It's going up. Unfortunately, it is screwy, isn't it, that I want down days? I mean, it's nuts. It's absolutely nuts. Am I selling naked puts? RJL? Yes, that's exactly what I'm doing. I'm selling naked puts. So let's take a look and see what I did last night. So yesterday at 8:30 in the morning, I was selling, that's 227. So quite a while ago, I was selling them to open, and I sold more to open on March 1st at 6:30 at night. And then, let's see, was it the night before then, I put in some crazy Ivans that said, okay, I sold some at 6:30 at night at dinner time for 220. I also put out an order, said, okay, well, if you're crazy enough to give me, I think they were trading at 200 at that time. So I put them on, say around probably before I eat dinner. So probably around 5. I said, probably before it to open, I probably put them down it was trading at 200. So I said, if you're crazy enough to give me 220, I'll take it. And then I said, if you're really crazy, Ivan, and willing to give me 230, I'll take that. And if you're a nutso crazy, Ivan, I'll take 240. And if you're really, really insane crazy, Ivan, nutso, I'll take 260. So it was trading at 200, and I'm telling it 220, 230, 220, 230, 240, 260. And sure enough, look what happened. The market started tanking. This was on March 1st. At 6:31, I got the first one filled. I was eating dinner, fat, dumb, and happy. I wasn't watching the market. And then at 1:30 in the morning, I can assure you, old Rob was sound asleep on his pillow. And there you see, cha-ching, 138 as that market dropped. And then 148, just 10 minutes later, I got a fill for $240. Wow. And now $300, I'm still sound asleep and the market's tanking. And look at that. I get a fill for $260. Are you kidding me? Thank you very much. I'll take it. So then Maria started telling me, hey, the market's down this morning. And so about 7:42 this morning, I looked at it. I said, okay, I will take 270 if you can give it to me. I'll take 285. I'll take 300, and I'll take, what's this, 269.50. This is the one I just put on a few minutes ago. So, and we haven't gotten any fills. It was down, I'm going to say 500-ish at that time. And what's it down right now? See, it's only down 385. Again, I know it's backward thinking, right? It's like, I'm so depressed because it's not down. But that's the reality of it, And these huge down days, they only happen 2 or 3 times a year, 500 it's great, but I would love 1,000-point down day. That would be awesome. And 1,000-point down day, you'd just be killing it. Let's see what we got in here. RJ says, I'm using Thinkorswim with Schwab and cannot locate the exact symbol you are trading or anything with those strike prices. Well, that's because on Schwab, you have to have a special authority to trade futures. On Tasty, you just go in and click a button. On Schwab, you actually have to get qualified, and I think it's a little bit different to do that. If you don't have a representative at Schwab, I highly recommend that you get one. The way it works at Tasty, if you call their tech support line, you can ask for anybody. I use Marty and Quentin. And the way that Tasty's tech support works is they recognize your phone number. So when it comes in, it will route it to Marty first. He's my primary. And then it will go to Quentin. He's my backup. And so they know who you are. They know how you trade. And they can, you just get a little more personalized service. There's no extra charge for that. Schwab has the same thing, right? Ralph is my guy. He's in Phoenix. And my calls to him will get routed to him, but you got to get it set up, right? That's the only thing. Let me get this straight. You got to get it set up in advance. But yeah, you do need to have futures trading in order to do these NQs. You can do them on QQQ and you can do them on 0DTE or SPX. The problem is you don't get any leverage, right? Let's just take a look. And it's a great question. It's a great question. So look, I'm going to do these here again. This is not rocket science. It's so freaking easy. It's so freaking easy. If you're set up and ready to go. Cardinal rule, 30% buying power. Okay, 30% buying power. And I understand a lot of people say, well, Rob, when you're putting on these, when you start off and you're selling these at 240, right? But by then it's the you start selling the first one, it's at 200, it's 12 delta. By the time it gets to 220, it's probably 14 delta. 230, 16 delta, 240, 260 might be 18 or 20 delta. Yeah, that's true. It is true. But what you're trying to do is you're trying to average in. And I liked, in a perfect day, I will have a whole, say we're starting, the market's up here. I'll put in Crazy Ivan here, 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 here. And the idea is that as the market comes in, I'm going to get caught. If in a perfect world, I won't have all of them, right? It'll pick up some, and I'll have some that are so crazy it never picks them up. But that way I will have picked up the dip. As it dips, I will have picked up those down at the bottom. And that's the game. You want to try and get as many of these things on as you can. So if I have a limit of 65, then what I'm going to do is I'm going to say to myself, well, I want to put on at least 40 on 1,000, down day. I'll have a total of 40 on. I think I got 21. So if you have a $200,000, again, $200,000 of buying power, $200,000 of buying power that how much buying power do you want to put into the system, right? So if you want to put in, I think on mine, I'm putting in $1 million worth of buying power, something, whatever the numbers are, right? So I want to put in $1 million of buying power, and that's going to give me 60 or whatever the freaking numbers are. And so you 200,000, take 200,000 divided by 15. I wish somebody could do math, right? But those guys are all doctors by now. So let's just see. I'm going to get out my handy dandy calculator here. Pardon me. I'm going to take, say, 200 grand in buying power divided by 15,000. That's 13 of them. Okay, so you can do 6 of them for every 100 grand of buying power that you have. So if you're going to do 6 of them, I wouldn't want to do more than, 2 in a day. And if you get a good down day, if this would 1,000, down 1,000 points, then that's probably what I would do. But I'm not going to do that when it's, only down 400. I might put on 2, 1 or 2. If I only have 6, though, for 100,000 in buying power, I'd probably just put on 1 today. So let's take a look. Any more questions? When you roll the put down and out, how do you keep track of the cost to get your 25% profit? Another great question. Mario's got a great question there. When you roll something down and out, you know what? Let me use this CLS, because this is something that I have rolled, much to Maria's chagrin. This was an earnings trade that she got me into. And so what you can do is 2 things, 2 ways you can do it. First of all, you go over here to Tasty, and this is the order chains, right? And this shows you the order chain. And so When I look over here, it says I got a 6.1% profit. Do not be fooled by that. That is not true. Okay, that is not true. In fact, you can see that I sold to open this put on whatever day it was, on January 28th at 3:43 p.m. right before earnings, and I sold this for $6 credit. It then got close to 280. It's basically the same as Crazy Ivan. Naked puts are this. It's always the same. As it gets close, but before you're in the money, as it gets close, you want to roll it down and out. So, because that's when you're going to be able to get the best credit. You want to always roll it for a credit. So I rolled it from 280 down to 250. I rolled it from February 13th, if you can see this, out to March 20th. So I rolled it out another 30 days. Normally, I like to roll 45 to 60 days more. And I got a $1.75 credit. Great. So now my total credit is $7.75, but it's trading at $17.05 right now today because it's probably down. Yeah, it's down $13. See this? It's down $13. So I'm really down 930. So don't be fooled. What they're showing here is how you did with this particular put, right? With the March 20th. It doesn't show the combined. This doesn't show the combined. This, however, is the order chain. So the order chain, if I keep rolling and rolling and rolling, I've had some where I've rolled them 6 or 7 times. I've had them for 6 months. I just keep rolling. The stock keeps dropping. I keep rolling. I'm lowering my basis. And eventually I'll get out with a nice profit because you're just waiting for it to come back up. So you just keep lowering. And so, right now I'm down $1,000. Okay, that's fine. It's got to go all the way down to 250. What's it trading at? 253. Okay. Red alert here. I should have been watching this more closely. If this comes down to 251, it's a trading show. Let's do some trading, right? If this came down to 251, it looks like it's going to be close. Let's take a look and see what would happen, right? I'll show you exactly how to do it. And here's the other way to do it, by the way. If you go here and I just say, okay, I want to close this position, notice what Tasty does. They put a little thing here that says OC. I don't know if you can see this, but it says OC, right? That means order chain. You can click that off and it says, well, that's how much you'd make on just the one put. But you click on it and this is the true order chain where you'd be down $1,000. Okay. So now what do I want to do with this? First of all, I want to roll it out in time. So I'm going to click on this and it's going to show me that, okay, let's go back to positions. I want to roll this thing down and out. So I'm going to roll to expiration. I'm going to roll this out to 45 days. What is that? Right now I'm at 17 days out. 45 is not enough. I want to go a little bit further. So I'm going to hit time and I'll go out. So now 73 days. Great. Now I don't want to roll this from 250 to 250. What's the good in that? It's trading at 253 right now, right? I don't know if you can see this up here. Right now it's trading at 255. So it's come back a little bit. So I'm going to keep going here and watch this. See this credit as it keeps getting lower. I want to always roll it for a credit, but I want to go down. So here, 30 cents credit. And I can now roll it from 250 down to 210. Are you kidding me? See, that's the beauty of it. I'm going to get a little credit. I'm going to get $30 and I'm going to roll it all the way down from 250 down to 210. Remember, I started at 280. It's trading at 253. So this, even though it's gone down, even though I was trading a naked put, I can still make money. Now, just by May 15th, it's just have to be above 210. I mean, come on. What happens if it keeps going down? I'll roll it down and out again. Now, I'm hesitating just a little bit right now because I'm seeing, you guys can't see this, but it's coming back a little bit, right? Let's keep an eye on this. It's coming back at 254. So I'm not quite there yet. If it's down to 251 or maybe even hits 250, then I'll roll it. The same thing applies for the Qs, right? If these, by the way, these Qs are the ones that I put on last night. So look at this. I'm making a nice little profit on these. So I put these on March 3rd. Let's go ahead and look at what Tasty does. I can go in group and I can say, okay, these I put on March 3, right? 3-3. And you can't see it because of 25% profit. And if I hit enter, boom, there it shows up. So, rat fink. Is this? Yeah, 3-3. So you can see I put these on 2-3, and I keep telling myself 25%. All of these were like 40 or 50% yesterday, and I got too greedy. Somebody remind me not to be so freaking greedy. But luckily, I got a lot of room. If I only had 100,000 buying power and I was going to get 6 of them, I'd be hardcore at 25%. I tell you what I used to do. What I used to do on these things, by the way. Time for a little apple cider vinegar and iced tea. We don't do commercial sponsors here, but if you're thirsty, drink iced tea with apple cider vinegar. It's yummy. All right, back to our regular scheduled program. What I used to do is I used to put these on every single day at 10:30 in the morning. Why? I tell you, there's a very good reason why I put these on at 10:30 every single day. Because I like to go swimming in the ocean, and I like to go surfing every single day, and I like to lay out like a great big lizard out by the pool and get sunburned. So I don't want to be looking at the charts all day. So what I used to do is just put these on every single day at 10:30, these naked puts, these crazy Ivans, and then I would just take a look. I'd come back in around 3:45. I'd see if any of them are over 25%, and just like clockwork, I'd sell the sons of guns. So I didn't sell them during the day, and sometimes they'd go up to 30% profit, maybe come back down to 20% profit at 3:45. I wouldn't close them. Maria'd be like, "Why don't you close them during the day?" Because I back tested this, and you're basically averaging in and averaging out, and you're going to do way better off. And like I said, I did this for 6 years, and this is my 7th year of doing these, and they pay all the bills. It's awesome. It's absolutely awesome. I highly recommend these. If I had, one gun to my head, one trade to make, this is the one I would do. And that's why I continue to do it. All right. When you roll the put down and out, how do you keep track? There you go. All right. There's Uman in there. Hey, Uman, good to see you. He shows up once in a blue moon. Once in a blue moon. There's a chance to make money. If Uman shows up in the chat, it's a money-making day. That's for darn sure. All right, look at this. Now we're down 500 points, which is kind of getting a little more interesting. Let's take a look at the chart so we can see that. Where are we on this chart? Is this, where is the darn thing? It's trading at 495. It should be in there somewhere. Oh, there it is. Okay. So good. This is starting to come down a little bit. We love that. I'm looking at these levels. I'm not a big charts person. As you can see, this is what the low is. One of the nice things about Tasty I like is you put the bubbles in that shows you the highs and lows for the day. It's really easy to see where it is and what it is. But I like to see this thing come down even a little further. But 500 points, that's starting to get interesting. That's starting to get very, very interesting. Let's take a look-see and see where we can make some more money. Like I said, on these, I bet you I'm making some money. Because it's coming down, right? These were green just a few minutes ago, and now my average. So for those of you that don't know, trade price, that means what you traded it at, right? That's what you traded it at. So I traded these two at an average of 251, these 9 at an average of 216. It's pretty self-explanatory, right? Here it shows you the days open and the days to expiration. People tell me, are you worried about the expiration? No. Here's another little trick that Maria taught me. Extrinsic. What is that? Extrinsic is how much money you're going to get if you stay out of the money. So, for example, on this one, right, this is my worst one, March 20th right here, it has 16 days to go, but the strike price is 23,250, right, 23,250. What is this? This future is trading at 24,500. So that means I got 1,250 points to go. I get it. Something happens terrible, God forbid, in the war or whatnot, the market crashes, 1,250 points. It's certainly possible. It's not probable, right? Let's just assume for the sake of argument that doesn't happen. And that, in fact, what happens is that it stays above 23,250. Well, what's going to happen is this extrinsic is going to go from extrinsic into my profit and loss. So this is what happened. This is all the money you're going to get if it is the case that you stay out of the money. That is that this number here stays above this number here. So if the current price stays above the strike price, that's how much extrinsic you're going to get. And you're going to say, well, okay, $5,000, that's pretty good. Yeah, it's great. And then you look at all these that I got. And now you're saying, okay, 23,000, this one's got 1,700 to go, 22,000. So this one's got 2,700 to go, and 22,000. I mean, self-explanatory, right? And you say, wow, there's $113,000 I can make. That's right. If this market just stays flat or goes down 2 or 3%, I'm going to pick up 113,000 here and 5,000 here. And a lot of people would say, oh my God, I've lost $113,000. Panic. I need to know what to do. No, settle down. Okay. We know what to do. We understand the math, right? We understand the math. When you're looking at it, it would have to go I mean, let's take a look. Let's take a look at this chart. I don't even know if we can do it. What did I say? 22.5, right? 22.5 is down here. And this is, look where this thing has been. Better yet, let's do it this way. Where has it been in the last, in the last 3 weeks, right? Where has this thing been in the last 3 weeks? It's been up, down, 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 up, 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 up. Remember, this is where's our number? What do we call it? What did we say it was? Let's call it 23.5. Pick the worst number that we can have. 23.5 is right about there. So when's the last time it was under that, right? Long time ago. So this is a 3-week chart. We're going to do a daily here. There's something to open. Look what Maria's been doing at 245 and where it's trading at 180, right? So now where are these darn things? There's my number. Where's my chart? There's 3 weeks. How about if we do it for the last 2 months, right? Here's where it is for the last 2 months. Remember, we don't have that long to go, right? These got 16 days. These got 28. These got, the most we do is 60 days, right? That's the game. So when you look at this and you say, okay, well, where's it been in the last 2 months? This is where it's been in the last 2 months, right? I don't know if I can. But you can see it's not been anywhere that's been a problem for us, right? It's not even close. It's not even close. We're talking about, what I'd say, about 120 grand worth of profit if it just stays above this line, right? And if it gets under this line, what are we going to do? We're just going to roll it down and out. This is not rocket science, right? This is not rocket science at all. So now, am I going to actually get the 120,000? No, because I'm probably going to close out at 25%. I got my little fingers burnt. Some of these I might hold on for 50% because I'm kind of pissed at myself for not doing it, and I don't want to admit that I was wrong. But that's really not what you should do. Doggone it. Now this thing is turning around. I know it's terrible to say, but I would sure appreciate it if it was a down market. It's just not down enough to make it pay. So it is what it is. So, okay. We could go in and do a few MNQs, scalping, but it's not really my game. So this is where we are. It's just not, I wish we'd go down a lot more so I could show you, but I'm not going to be getting into these. Look at these. It's 300, 200, let's take a look at where you can see where these are my current positions and where are my working orders. I think what do we say? We put in a working order at $58 here. So this is wrong. Okay. So we're going to go, this is crazy. At the money right now is $872 or $900. It's just nuts. Normally it's like 400. So the VIX is through the roof. What's the VIX at? It's up 22%. The VIX is up 20. So the sheep are scared, right? And you're going to be able to sell premium for so much money now. It's nuts. It is a trading show. Maybe you should get in something here. We're down 500. If you don't get your 25% before expiration, will you let it expire? Yes. It depends. If let's say it's at 20%, I'll probably just close it and take the profit. If it's at 5 or 10%, there's really no difference. You can either roll it down and out, or you can just close it and open a new one. Basically, rolling it down and out is essentially that. So if I wanted to, Mario, I've actually never been in that position. Normally, if I'm disciplined and do it the right way and take it at 25% profit, that comes normally after 14 days, 21 days, give or take, for sure, right? So very rarely, last year I think I rolled it down and out twice for the hundreds of them that I did. So it just doesn't happen that often. You know what? I want to do something in this show today. Let's see what we got here. I would like to buy 21. These were, what was the worst one I got? The worst one I had today was what was it? Did I do any 21 500s? 21 500s was 242. Can I get that at least? Can I get that at least? At least I can get one more because at least I can show a trade. What are they trading at? I got 242 on those. Oh, okay. Yeah, they're trading at 246. Why not? So I hate to bring my average down. What's my average on the 21.5s? On 21.5s, I've got an average of 251. Dang, I don't want to bring that down. You know what? Let's do this. How about we do this? Well, look at the spread. These frickin' thieves. Are you kidding me, these market makers? That is way too much. I'm not crazy about that at all. So let's take a look here. You know what? What have I got? I got some orders in? No, I don't. It would have a W over here. It's a 14 delta, which I normally don't like to do. What do I have? Some 21.250s, 21,000s. What else? Other orders do I have in here? I got some 21.250s on the April 30th. So these, I got orders at 270 and 285 and 230, and they're trading at 236. So maybe I could take one of these at 242 because it is down 500. It would be nice to pick up. Like I said, I picked up what I get last night. I got one at 339. I bought two. I sold two. So let's see if I can't sell one more. I mean, it is a trading show. Let's do a little trading here. So I'm looking at 21.250s. And so 21.250s are right here. And I really would normally, Maria would like me to, she likes me to go up two of these. So that would be 284. Look at this spread, $20. Normally this spread is $3, right? And right now it's $20. It's such, these guys, when there's a lot of fear, these market makers are making a fortune. It's a business. That's what they do. I get it. So these are trading, and look, I got the 2100s. I'm trying to get 269. I'm getting 213 right now. 21.250s, 21.5s are no good. I can't do that because I got 250. What's my average of the 21? Of the 21.500s, my average is 251. So I definitely don't want less than that. I want 251 of these 21. So let's do this. Let's go ahead and sell one of these, and let's sell it at 265. Do I have any that are out there at 265? Let's see if they take them. What do we got here? I got one at 269.50. Oh, that's the 21. Okay, so let's go 265s for these. Let's do one of these at 265. They're not going to give me a fill at 227. Let's see here. 265. Let's try it. All right. So how about 275? 275. 275, and we'll give 50 basis points for the dog. So 15,000 is going to be the buying power, and we're going to get $5,500 in credit. So we close that for our $1,250 if we get a fill. And so let's see where we are. So this is the one we just put on. No, we put on a 21.5. Where is it? Oh, notice that, and this is a good learning experience. Notice this was the NQM6. See this? NQM6. It's not like Microsoft or anything else where you're selling Microsoft, you're selling a Microsoft put. No, it's not the same. In futures, there's 8 contracts a year, right? There's 8 contracts a year. They denominate them by saying it's an NQ. Then it tells you the letters, and it's not in order. It's crazy letter mix. There's 8 periods during the year, and then the 6 is the year, right? So, and this is the end of the quarter, and that's what these symbols mean. It's irrelevant. So, I like to. By the way, Maria pointed this out. I love trading the end of the month, not the weeklies. So this April 30th, I love it. As long as if I had a choice of anything between 45 and 60, and one of them is end of the month and one's weekly, I'll take end of the month. And just look and see why. Here's the open interest, right? And notice this is why I do the 250s. You can see at the thousands, it's a little bit more. 250s, it's more. 500s, it's more when you look at the open interest. But look at the weeklies. You're looking at the weeklies, and it's at 45 days, and you're looking at pretty small numbers. And then I bet you when we look at the larger ones, look at this. So you're on the thousands, you're getting a lot of interest. Somebody's got a big order in there that they filled. So that's kind of interesting. So somebody's looking for this market to go up. Some big players looking for this market to go up. and we're down 530 points right now. Man, I wish it would come down a little bit more, but okay, let's get a trade on here. So we're going to go to all symbols because we want to get all the trades. So notice this is the M6. This is just looking at the H6s. Theoretically, that shouldn't show up, but it does. So, okay, 275, and they're offering me 251. Let's go down to 265. See what we can get. Maybe we get a fill. 265. What's this at? I'm trading the 21.5s. So 21.5s. Are they going to give me 260? Oh, then, I don't want to go. You know what? 275 is fine. I could set the market at 271. Let's do that. 271.5. Okay, that's going to set the market. Boom. 272.50 is the market right now. So look at this. Boom, look at us. Boom, and it's going to change that to 271.50. How about that? We're building the market here. So let's see if we can get a fill. It's still more than my position, right? Is my position, if I remember correctly, it's 251. So 271 would help out the cause a little bit. If this comes down to like 600 maybe or so, what's this movement? So we got a nice downward movement. I like that. I mean, I love that actually. Let's widen this out so we can see this a little more fun. So if this keeps moving down, I love this trend. I mean, I absolutely love this trend. Should be able to do extended lines or trend lines. So if you look at, look at this trend line. This is kind of nice, right? And do another trend. So you see lower highs and then you see higher highs. So let's do extended line. Here we go. I'm not that good with these, but you can see if I take this line and move it over, you can see where this is kind of going in a channel, and we love that. I'm not a chart guy. I got to tell you, I'm just not. It's not my game. I pretty much ignore the charts. But I do look at the charts just to see if it's going down, just to kind of see what's been happening during the day. This is the number I look at over here. I want to know what's happening over here. Let's change this to price level. So and remember, what are we putting on right now? We're putting on 21.5s. So, I mean, we are looking for, that's not what we're looking at. I'm going to take all these off. You know what? I'm not going to take that one. I'm going to take this one off. I'm not trading this one. We'll take this one off. And one more. So, look, this is the 23.5 that I've gone on already. And what are we putting on right now is way down here at 21.5. Boom. So, I mean, come on, man. Come on. This is easy business. I mean, this is easy stuff. We're going to be just golden here. So let's take a look. See, I am looking to see if we have any other chance to get on here. Come on, man. What do we got? So we're setting the market at 271.50. Let's go back here and take a look. See, so remember 251 is our average. So we're going to go take a look at, let's see if we can't move this. Look at that. Someone undercut me, those dirty dogs. All right, I can go down to 251. So let's replace this order and let's go down. You think you can do that to me? You got another thing coming, buddy. 266. How about I got your 266? Hold my beer. I'll give you 265.50. Bam. How about that? Oh, bam. How's that taste? Huh? How's that taste? 265.50. Now who's setting the market, huh? Now who's setting the market? That's right. That's what I'm talking about. Look at these. These are the other trades that I've got working out there. If you don't get your 20, there we go. Any other questions in the chat room? Let me know. Sounds like you guys got this handled. I got to tell you, I'm having so much fun. I love trading. I absolutely love it. I'm a trading addict. I want to get this in here, though. What I got to do is get Tyler in here and have him doing these, the scalping, because that's really exciting stuff. I could do it, but I'm not good at it. I mean, I just got to tell you, I'm just not. I don't have enough experience. 265.50. All right. I know I shouldn't do it, but why not? Let's live a little bit. You know what? We'll do some MQs. MQs won't ever hurt. MNQs. All right. Let's do it. You really want to have some fun? Let's have a little fun. Don't tell Tyler and Maria they'll have a fit if they find out I'm doing this. So here's what I like to do. I'm gonna set these up for 120 basis points. So each one of these is 120 ticks. Each tick is 50 cents. So I can win or lose $60, right? That's the game. I can win or lose $60. Let's take a look. See, okay, that's what I want. I'm going to save this setting. All right, so now, I don't know what you can and can't see. I am going to, you know what I'm going to do? I'm going to try and get this so that you can see. It doesn't matter about that stuff on the side. This is much more important. Okay, so here we go. Now, understand that I don't know what I'm doing, all right, when it comes to these. I just don't. I just don't have enough experience. So I'm watching these charts, and I'm looking for this thing, and so I'm seeing an upward movement. If I wanted to, what I would do is I would go in and let's just say I'm going to go with something crazy, so I'm way out of the market. No, that's not out of the market. Look at that. Here it comes. Holy shnikes. So this thing is moving to the upside. All right, so if I put this in, I got to put it in because I use two clicks, right? So I'm going to go 2 clicks, boom, boom, and see if I can get in. Okay, now, if the market comes up to this one right here, then I get a fill, and it's going to go up to the upside to win, and it goes down to the downside to lose. That's the idea. $60. This is live trading. And we're going to see what happens here. Here we go. Get ready. I like this because this is a huge gap to the downside. Let's see if this fills to the upside. And let's say that, I don't think it's going to go. If it goes down past this, it just cancels out the trade, right? So it's great. It'll just cancel out the trade. It's easy. You can do it this way. This is not how Tyler does it. It's not going down low enough. Say, okay, you know what? This one, it doesn't have any strength to the downside. So boom, I just close it and it closes it out. Okay, fine. It's not that hard. Let's say I think it's going to go to the downside. Well, I'd go over here to the downside. I want to be out of the money, right? And I say, okay, I'm going to scroll out of the money to say 480, right? Down here, 480. Say, I think it's not, if it goes down to 480, if it's got some strength going to the downside, then I'd like that, right? That's kind of what we're looking for. Why is this? Just to make sure that we're looking at the right thing. This is a 5-minute chart to see, this is another way to look at it, is a 5-minute chart to see what kind of strength it has to one way or the other. If you're looking at these candles, you can basically say, well, if it got to the edge of the candle, there's enough buyers, there's enough sellers here or enough buyers here to move it the other direction. So it's highly likely that it's not going to move past those. But once it clears out those to either one side, then it's going to have some momentum to that side, especially if you get multiple candles in a row. That's basically how they work when you're trading these things live. Do I sweeten the tea? I do not sweeten the tea. I use, yes and no. It's a terrible answer, right? It's a politician's answer. Do I sweeten the tea? The way I do my tea is I use Lipton lemon sweet tea, but 0 sugar. So it's no calories. Then I add apple cider vinegar. I've been drinking this for 40 years, right? I love it. Apple cider vinegar is supposed to be good for you. I just like the taste, but it's supposed to be good for you. All right, so now let's see if we got some momentum to the upside. Okay, we got momentum to the upside. So let's take a look here. We don't want that one. Let's see, where are we going here? 25, 32. Oh, we're up at 38. How come this is not recentered? We want to recenter this. Boom. Okay. Look at this thing going up, up, up. So I'm going to say if it goes through, what we got some numbers here. If it goes through 551, I would see some momentum to the upside, right? So we're going to say, okay, let's go to 551. And there's 40. 42. Tyler and I love 42. So let's say if it goes to 555, if it goes to 555, then it's going to have some momentum to the upside. Boom. So I'm going to go ahead. I'm going to put this in. I know you're supposed to use the one trade. So now here's what we're doing, right? So we can take this like this and say, okay, if it moves up to this number, then it's going to fill, and then it will open these my closing orders, this one will be a profit. Think of this one as a profit and this one as a target because I'm doing it to the upside. If I had wanted to do to the downside, I just would have gone over to the green, right? It's pretty simple to do. And now we've got a lot of down movement, so this is not going to get a fill. I mean, look, it's going way far away from me. So, okay, take that off. Hard to do a trading show. We can't get a trade, but you know what? Better safe than sorry. There's no rush getting into this market. I'm not good at this, but it's $60. Take it or leave it. Let's see if we can't get some sort of trading here. All right, let's see if we get any momentum. I see it's just choppy, right? It's just choppy. I'm not interested in the chop right now. Let's go back and real quickly take a look-see at what was going on with my trades. This is a real easy way to do it with, remember, we're watching this CLS. We want to keep this bad boy. I don't know if you can see it because of me, but this is the CLS. I can switch it around, boink. So this is that CLS trade. And look, if we want to keep that above 251, so and if it's not, we'll roll it down and out. And so this is far away, this one's far away, this one's way far away, this one's far away, this one's pretty close. So what's going on with this 21.5? Let's just take a look, see, replace order. Let's see where we are. Am I still setting the market? I am. I'm still setting the market. Look at it. These sons of bucks. This should be $3 or $4 difference. And instead it's what, $21. So the market makers are trying to make quite a bit of money right now. And it's a little bit unfair if you ask me. So let's go back and do some, what we were in the MQs. Let's go back to our active 2 table. We don't want to do active. That's when you trade a whole bunch of them. So let's go back to make sure we're in the MQs. We're not seeing any, look at this. We're just seeing chop. We're just seeing chop. I don't care for the chop at all. I mean, you can see this is a 5-minute chart, which is kind of fun. If you look at the 1-minute chart, you get a lot of misdirection, in my opinion, on the 1-minute chart. So I like to look at the 5-minute chart to see some real stuff. If you want to get fancy schmancy, you can. With Tasty, you can do both at the same time. So you can have, let's say we have, this is a 1-hour chart down here, which I really don't want to see. But say you got a 1-minute chart down here, and here you got a 5-minute chart, which is kind of a fun way to do it. You know, if you're interested in trying to learn how to do these, this is a pretty good way to do it. The MNQ is a great way to do it because it's only $5 a tick. Like I said, I set it up for 120 ticks. I used to do it at 50 ticks, and you know, tight is right when it comes to when learning. Always tight is right. You want a tight spread. I would get punched out too quick. It was more like flipping a coin. It wasn't. There was no skill involved. It was just luck, and I wasn't interested in doing that. It's a great way to do it at first to kind of understand the metrics of it. So you just save that, and now Tasty's going to put it in for me, right? So I'm looking at this trade. I'm looking at it's moving to the downside a little bit, and so if we get any downside momentum, I might come into the downside, but I don't know. It would have to go down to like 2440s. So if it was going to go down to 2440s, I'd scroll this down to 2440s, and so let's put in, and you can have multiple orders in. Let's say I want to put in a 2440. All right. So if it's got to go down to 2440, if it goes all the way to 2440, and by the way, you just double click it and it puts it for the whole page. So if it would go all the way down to, look at this, if it goes all the way down to 2440, we'll get a fill. I mean, I'm yakety saying it's not going to go down there. It just might. It doesn't look like it. Now you can grab these and adjust them, but I don't know if you adjust it, I don't think it moves the other part with it. So let's just see here if it does. Let's just see if it moves it all. Yeah, it does. Okay, it does. Okay, good. So, see, I learned something. Uh-oh, there, I canceled it. So let's take a look at it. What did I say? Whoa. Whoa, hey, that's one of ours. Look at that. Remember that 26,650? So, okay, the market's down 563. Trading show? I'm trading, huh? What'd I tell you? Look at that. It's hard to keep track of all this. There's that 26,650. Okay. Let's see if we want to put in a similar order. So where is this crook? And now it's at 23.73 is the market. Remember, I got to fill at 26 at 265.50. So where this moved which one did I trade? 265. Hopefully, yeah, well, all my averages were lower than that. So it's going to help all my averages. What was that trade? If I was a professional, I would know all this stuff. 21,500 on April 30th, 21,500. So here it is. So my average is 255. So I just put on one of these. So these are the two that I put on last night as well. So that's okay. 265. And do I have any others at 21,500? I do not. These are ones I put on 242 last night and a 260. So, okay, well, geez, 265. That's actually better. That's great. Okay, so now let's put on a similar order, and let's say, okay, so you want, I like to get at least 10. So let's say 289, let's say 285. 285, and we're going to put on 50 cents for the dog, and we're going to put that out there. So now if this market keeps going down to, you can't see it because we were doing it. If this market goes down to somewhere like, what is it? This is at 600. If it goes down to like 650 or so, we'll probably get a fill on this thing. What are we setting the market at right now? We are setting the market, I think, maybe not. We're setting, no, 285. So similar order. So this is where we're trading this at. We're putting this in. We're at 285.50, and there's somebody else trying to get a fill at 278.50. But that's okay because, we got that fill at 265.50, so we could have got more. Woulda, coulda, shoulda, right? And that's because this market just keeps on going down, like we kept talking about. It keeps moving to the downside. So we are doing okay. Let's see here. What else have we got? If we got anything else that's getting close to being filled, how's that CLS doing? CLS is trading at 253. You can't. Oh, there it is. You can see it. Oh, that's great. So if this gets down to 251, we would roll it down and out. But right now we're okay. So let's take another look and take a look at our positions. These are, we're asking 270. They're offering 244. Those are not close. Nope. The only one that's close is this 21.5. And, we've got an average price at 255. They're offering us 270. And you can see the same thing here. These match. This gives it to the penny. This is in the round number because it actually doesn't trade in the pennies. But you can see where we are. And now we've got 126,000 in extrinsic plus about $130,000 in extrinsic. So we're going to pick up 40, 50 grand when these things expire. And some of them got 45 days to go. Some have 16 days where we got $5,000. This has got to be above 23,250, and we still got 1,000. If this market came down, if we dropped another 750 points, some bombs go off or whatever, the herd goes crazy. If this came down to 23.5, I just roll it down and out. That's all I do, and I would roll it for a credit. And based on what we were looking at before, I'd get another 1,000 or 2,000 points worth of leeway. That's the game. Okay. Now let's go back and see what's happening with our little V trade. Wow, I would have gotten a fill, and I would have been profitable, right? Because we were going to fill it at 24.42, and it would have gone out at 10 ticks lower. So this has still got a nice trend to the downside. Let's see what we can do here. So we want to go down to the downside, and there's that. Let's say, is it going to break 24.4? That's where I would like to see. I'd like to see it go 10 under, so 24.9. 24.390 would be where I would like to see it go. If it goes to 24.390, then it's got momentum to the downside. There we go. And this is where I want to put in a trade. Okay. So if it goes down 10 more points, if it breaks through, sometimes it's hard for these markets to break through those firm numbers, right? We can put in, I think I can put in a line here. I know there's a way you can put it in. So if it breaks this magic number right there, if it breaks that number, and if it breaks, it's hard for them to get through those bigger numbers, the round numbers. But if it breaks that 24.4, I'm guessing, especially since we haven't got anything that to the downside. I mean, we weren't down except for at 6 o'clock this morning down below it. So if it breaks to that downside, we've got some real downside momentum. And you can see right now it's bouncing off of there. Normally that's what happens. It dips down below and then it'll pop back up. If this dips down below, then, and it comes all the way down here, I'm looking for this to drop pretty big. And so we would look for a 30 point drop, which is 120 ticks, right? There's 4 ticks to the full point. And what do we say? It's 50 cents a tick. So these are the small ones. If you were trading the NQs, it'd be 10 times as much, right? So instead of winning or losing $60, you'd lose $600. Kind of a fun fact. Up here it's going to keep. Oh, there we go. We got a fill. Look at that. All right. Now we're in the game. And now we're winning $5.50. And this is on this trade, and this is on for the day. Better have some iced tea. I don't know. Did I set this up wrong? Nope. It's got ticks. Did I move that around? For some reason, it seems like, oh, that's okay. That's right. So we want this thing to come down to here. That's what we sold it. So we're short. That's what you can see. It's S. We're short. We're short one. And if I wanted to go another one, I could. If I wanted to go to the upside, I could also pop in another one. So we are trading. You are looking live. We are trading live. Let's watch this thing. We want it to go down. We want it to go down. Hey, we could go have iced tea. We could go swimming. We could go surfing. Tasty does all the work for us. Now, if this started crashing to the downside, I might grab this and pull it out. Tyler's taught me that to try and pick up a little extra money. Look at this. It's coming right back up. And if this comes back up, then we'll get punched out and we lose our $60. So we're down $28 right now, $29. Also, you can see it right here over on the side. This is another way you can keep track of it. Tasty's got all different ways. It shows you what the price is here. It shows you exactly what your profit and loss is on this particular trade and for the day. For those of you that are active traders, this is a great way to trade. It's really easy to do it. That's what I like. Don't forget, as I mentioned to you before, if you want to see two different systems, you can, but let's just keep it, the 1 minute chart's a little more exciting. So we want this thing to come down. Where we actually got in was at, I think, what was it? At 10 points below. We got in at 24,390, I think is what we got. Yeah, so here's our average price. It can show you, this is where your average price is. And I want to be sure, can you see PL open? Let's make sure that you can see that. There it is. So this way is better. You can see all the trading. I had moved it over because we were, so what happened there? What the heck happened? Oh, that's Tyler. The sounds you hear are, there's a problem when you got family trading and you hear them trading as well. So we were down 50 cents. Now we're down $10 on this one. Keeps moving around. This is getting exciting. Come on down. Come on down. And if we wanted to, we could go ahead. Let's take this out because it's a little bit disconcerting. There we go. Come on down. Bring to the front. No, hide. How about that? Hide that one. There we go. So now we're $21 to the good, $23. You can see it's pretty self-explanatory. And if I wanted to go in and say, wow, I think this is going to go even more to the downside and say, if it breaks 360, look at that. I almost got a fill there. Look at that thing. Oh, darn. Here we go. Here we go. Come on down. $43 to the good. 38, $40. Come on down. Now, if I wanted to, I could just grab this thing and pull it up there and I'd get a fill. But you know what? I'm stubborn. Oh, look at that. It's coming back. Come on down. Turn around. Let's see if we get some momentum to the downside. You got to love it when you see these kind of candles going boom, 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 boom. It doesn't mean it's going to keep going that way, but you got to kind of love it. Let's take a quick look at the 5 minute. The 5 minute is going to show you there it is. It's a little bit choppier. You know, it's showing you inside the 5 minute, but let's go back to the 1 minute. 1 minute gives you a really good feeling for where we are. Look at that. Look at that. Here we go. Whoa, whoa, whoa. It touched it again. I cannot believe it keeps touching it, but not going through it. There we go. $53. We got to get to 60. Come on through. Come on. And 53, 48 was right there. A little bit more to the downside, a little bit more. The thing is, look at how big these candles is. This is a choppy market for sure. This is a choppy market for sure. We want to get this down and under. Here we go. Here we go. Here we go. There we go. There we go. Come on. Dang. Let's get this so I can really see it. Come on. We need to get down there just a little bit more red, a little bit more red. Look at this. We're down 600. You can't see it. We're down 600 points in the Qs. So we got to get back over there. Come on, man. Down 655 in the Qs. I bet you we're going to get filled on those other Qs. We need a little quick dip. Little quick dip at 360. Come on down. And, it's right there, man. I thought it was, there it is. Boom. How about that? How about that? And there it is, $58.50 after commissions. We paid $1.50 commissions. Easy cheesy. That pays for dinner or some dog treats for Barbie. Let's get back now and look at our positions. This one, did we get a fill? Maybe that was me that got a fill, huh? 1025. I did get a fill. That's what happened. That was at 285.50s. Got a fill. 285.50s, and that was on the 21.5s. And this ones are the 21.250s. We're trying to get a 285.50. A 300. We got what's our closest one right now? Our closest one right now is a 21.250. And the 21.250s we have an average This will be a new one. This will be a new one that we'll be entering into. And we're down 650 points. So, things are looking up. As where there's a new low. We love that. I mean, this is exactly what we're looking for. If you're looking to trade Crazy Ivans, this is 100% exactly what you're looking for. Is you want it to come down into this space down here. And we're looking for a continuation down, and we're trying to fill up. Let's see now. Let's find out how many I got. I want to make sure I don't have too many. Right, so I got 13, 17, 23, 24, 24. So, and I want to go up no more than 65. So I probably would put on no more than 5 or 10 more, probably 5 more today, maybe 10, but that's going to be it. And the reason I'm thinking that is that this is not an economically driven motion, right? This is not economically driven. This is 100% driven by politics. So even though it's down 650, it's probably just some bad news that's going on or some rumors or whatnot. And man, would we have been killed if we were trading zero DTEs. When you got a market like this, here's what would have happened. We would have come on at 9:30 and we would have had a pop to the upside, and probably you would have gotten some calls getting triggered, but then all your puts you'd be out of all your puts already. Now, granted, you'd be coming back in at this end of the market, but you probably would have been hurt pretty bad right now. You would have been hurt pretty bad going into this situation. And that's why it's not worth it. Why take the risk, right? I mean, we're already up $60 trading those MNQs. So, all right, no, I don't want to go back to that. Look at this thing keeps going down. What I want to talk about is where we are with regards to these. So we've got, I just want to see the working ones. All right, so we got 270. They're giving me 261. And when I say 270 right here, these are the 21-250s. These are the new ones, so I don't have a position. I just want to always make sure that I'm improving my trade price, right? So on these 21-500s, I have nothing going on. On these 22-250s, no. On the 21-250s, those are all going to be new. So these are all 20, and there's 21,000. That is also new. So right now, these are all new positions that I'm looking to put on. We're down 644 points. You can see that I know it doesn't say it, but these are the NNQs right here. The NQs, not the MNQs, the NQs. So look at Bitcoin is hurting. Man, that Bitcoin is crazy. And the SPX is up 30%. Thank you very much. This fear factor. This is what is paying the bills, right? That's what's paying the bills. So what are we on the Qs? The Qs are at 24.4. All right. So 24.4. So if we're selling the 21-250s, I mean, that's way out of the money. What you hate to do is you hate to not get in, and then tomorrow, or the next day when these things go up, you're like, oh, why didn't I, woulda, coulda, shoulda, my 3 best friends that sit right here on my shoulder and jabber in my ear, And one side is saying, be conservative, don't sell any more puts, be conservative. This guy's saying, how come you didn't buy more? How come you didn't buy more? Be conservative, be conservative. How come you didn't buy more? How come you didn't buy more? Having said that, one thing I want you to remember, we are professionals. We are math-based traders. We are not emotional. This is purely for, our lawyers want us to remind you, this is purely for educational purposes only. This is not financial advice. Do not copy us. We have lots of different buying power than you do. We have lots of different strategies. We have lots of different goals than you do. And, I wonder if anyone would be interested in what trades we are when we do start trading the Qs. Just so you know, let's quickly run through the trades of the week. If you don't know if you're new to this channel, we trade 0DT SPX. We use AI to generate all of our trades. All of our trades are put on by bots, and we do millions of back tests a week to determine what trades to do. We run it through AI Vera, which is what Maria built. It took her about 9 months to a year to build it, our AI trading assistant. We back test through Options Omega, and we use bots from Options Omega as well. We don't trade anything by hand. We do, as obviously, 0DTEs. There are multiple entry iron condors and exponential moving averages. Since October 1st, there's been 151 calendar days. We've traded 100. This is actually 2 days old, so we traded 103 days. We've done over 15,000 trades. And remember, these are all the things that are different between us and you. And just so people like to see this, we've made on $1 million account, we trade 2 accounts online. One's a $1 million account, one's a $30,000 account. The $1 million account is up, somewhere in the neighborhood of $427,000, so 42%. And that's with 15,000 trades. And you can see pretty much, we show it every day, very transparent in our channel. And then the $30,000 account, likewise, it's up $13,000, about 5.2% capture rate of $250,000 in premium sold, 2,700 trades there. So even in a small account, it's 2,700 trades. And again, you can see it's pretty straightforward. You have a little bit more, if you were to compare those charts, it's a little bit more wiggly in the smaller account. And that's to be expected because you're doing 6 or 7 trades a day. If you could get a run of, 4 or 5 of them that could go bad in one particular day. But this is all based on math. We have about, if you're going to look at the shorts only, we're going to have a 58% win rate, which is great in our opinion. If I told you we're going to flip a coin for millions of dollars and you're going to, heads is 58% and tails is 42%, you'd do that all day long. You wouldn't want to do it on one trade. You want to do it on 1 million trades, or in our case, you'd want to do it on 15,000 trades. So that's the idea. And then, so these are the trades that we're actually going to put on this week, although we haven't had a chance to this week. And these are for the small account. And you can see pretty much straightforward that this is the time, this is the amount of premium for the short legs, $3, multiple entry iron condor, 95% stop loss, and 50 wide wings. And so in the 6 trades a day, that's what we do. These are in order of profit. This is in order by time. This is by order of profit. And again, you can see pretty straightforward what these are. Is $2.25, multiple entry iron condor, 95% stop loss, 50 wide wings. Here we are for the $1 million account. We're going to put on 120 trades. I'm just going to give you the top 20 trades. I mean, I can't give them all to you, right? It's all free, so I mean, come on. But you can see pretty much this is the premium you want to get is the multiple entry iron condor or exponential moving averages. We use the 40 versus the 20, the 40 versus the 20. Yes, someone told me, hey, that's 42. Which is Tyler and I's favorite number. Yes, it is 42, but that's not how we did it. It turns out that's the best way to do it. And so here it is by P&L. Here it is by time. Here, take a screenshot if you want. I'll give you 5, 4, 3, 2, 1. There's a screenshot. Here it is by time. Take a screenshot. Hurry up. 5, 4, 3, 2, 1. All right. Small traders, here you go. By P&L. Take a screenshot, 5, 4, 3, 2, 1, okay? And here it is by time, 5, 4, 3, 2, 1. And if you want to tell your friends and neighbors about how we're doing, you can take a screenshot of this. I'll give you as long as you want on this because this is great. But again, you can see pretty much exactly what we're doing. We will tell you, I post a video every single day on our profit and our loss. I'm indifferent to it. The math will prove out. It pays money over time. And we're using tools that people didn't have available to themselves not too long ago. They're all freely available. We have a 5-part series on our channel about exactly how to do this. It's all 100% free. Nothing costs you nothing, zero. So if you're interested in learning how to be a better trader and how to make, trades similar to ours, but don't copy us, then that's exactly how you do it. Okay, so let's take a look-see and go right back to Tasty Trade, right? Let's see where we are. We now are looking at, there's got to be a way for us to make some more trades here. Oh, here's what's happened. So the market it's gone kind of bad for us. It's gone up. We didn't want that. We were right there at 10:30. Do we get a trade on at 10:30 when it was down? Let's see here. When do we get a fill? We got a fill at 10:25. So that's not too bad. That's why you have the crazy Ivans out there, right? Is because you have it down here and you have a bunch more and it's not going to go down forever. It's going to bounce back up. So you want to, catch as many of them as you can as you're going down, but still reserve enough for your 30% buying power. 30% buying power is critical. I don't ever use more than 30% buying power. I know I can put on 65 of them at one time. I know that right now I have on one, there's 10, 11, 20, I have 24, okay? So that means I can put on 41 more And so if I might put on 5 more today, let's say. And so it depends on the market. If the market stops, I get a little pickier as we go. I don't like to bunch them up because it could be another, 1,000 points down to debt tomorrow. And if it's down 1,000 points tomorrow, I'll probably put 5 or 7 more on and hold some more back. But my buying power will start to be used. And the whole reason that I got into zero DTEs, the entire reason I got into zero DTEs is because when you're only using 30% of your buying power for the Qs, and you're actually using less than that because 30 is the max. So normally I'm using 5 to 15% buying power. I got 85% of my buying power doing absolutely freaking nothing, or 70% doing nothing. And I used to put it in bills, and BIL or SGov, and you get they're just treasuries, and you get 4%, 5%. And I thought, man, there's got to be a better way. And I ran into Tammy Chambliss, and Tammy online has got a video that she produced about, 100 years ago, but it's a great video. It very clearly tells you how the math works for multiple entry iron condors. And I thought, this gal, I don't know, you can't say gal anymore, but this person is smart. This is a great idea. And so I started getting into those. And then I saw a guy named Dan Yankin, and Dan was doing multiple entry iron condors. And I asked Tammy what she thought about it. And she was very nice to say that they're great too. And so I started doing those. And then I just started doing back testing through Options Omega and different back testing, and then putting on my bots. They didn't have bots back then when I first started, and they came up with bots, and they're really easy to do. And by the way, if you're interested, I have a 50% coupon down below. Let's go into advertising mode. 50% off, 50% off, 50% off on all Options Omega subscriptions. And they give me $15 for every person that uses my code. And we use that $15 to buy Barbie, our dog treats, our dog toys. She loves those. She thanks you very much. She'll give you a bark. And then we also have the links to Tasty Trade. I think they give me $150 for that. And we give that money to the Humane Society to help dogs and cats and other pets. So if you want to get Barbie treats and toys, use our Options Omega coupon. And if you want to help dogs and cats at the Humane Society, please use our Tasty Trade referral link. And that's great. But if you don't, that's the way we like it. We also like Schwab. They just don't pay us anything to promote Schwab, but we're indifferent to all that. There's nothing on our channel where we're asking for money, at least not yet. Some people have asked us if we would do some sort of services or funds or whatever. And, it's a possibility, but I like to surf and swim. I don't like to watch the charts all day. So I don't know that that's in the cards, but you never know. All right, we do have a Discord. If you're not familiar with Discords, I was not until some of my grandkids shows me what they are. You can go into the Discord and you can, ask us questions. I will answer questions. You can also put comments in all the videos below, below in the videos. I definitely read every single comment in there, and I will respond. I think I've responded to every single one that hasn't been some sort of ad for Bitcoin. It's crazy the number of people that have for Bitcoin. In the Discord, there are a lot of fakes. It's Maria and Rob Helmick is our name, and we're DAB Options. And then they put like DOB Option or DOB Options period or period DOB Options or dash, or they put 2 S's or 2 B's or 2 I's or whatever. And they're a bunch of scammers. And so I try and kick those out as often as I can, but that's, I guess, a routine problem with Discord. So fair warning in there. I will never ask you for money. I will very rarely, if ever, DM you. I will very rarely, if ever, respond to a DM. If I do, I'll normally put in the Discord that I am writing to you, and you can see that it is actually me. So, okay, having said that, that's the end of our little advertisement. Let's get back to doing some trading. Where are we? This is now down 579. I don't know if you can see that, but that's where it is. It's down 579. What's our going? Our CLS is at 252. So it's getting a little scary there, but at 251, that's when we'll probably pull the trigger and roll it down and out, maybe at 250, because that's where we are right now. It's there are 250s right here. I don't know if you can see that, but that's where it is. I'll pop it around here. So there you can see it's at 250 is our strike price, and it's at 253. This was at 310 the other day. I could have closed it for woulda, coulda, shoulda, sitting on my shoulder, right? I could have closed that for a nice little profit. All right, let's take a look at these Qs. Crazy Ivans. What have we got going down here? I'm trying to get 270. They're offering 250. No. 285, 250. No. 300, 250. No. 269, 224. No. What have we traded in the Qs? We did get one at 21.5, and we got that for $285, which brought our average up to 263. So that's not too bad. I'm wondering if there's another trade out there. 605, so that's good. I mean, this market is moving down. It's trying to come down. It's trying to come down. This is CLS. That's why there's not a problem. There's a problem there. Let's see what the Qs are doing. So it's trying to come. Here we go. Here we go. Down 611. We'd like to see this. I'd love to see this 24.3 range, 24.350. If I can see this coming down here, we're going to get fills on some of these for sure, right? Where this is at 216. Even that one's far away. This one's the closest one we got. But you know what? When you take a look at it, the spreads are so big right now. It's kind of misleading. You know, it looks like, what are we trying? We're trying to fill at 270, and you think that's a lot, but it's not even. You know, it's not even the next 250 up. Normally we go down two of these, but this is not. How do your stops work with the 50-point wide spreads? Do you still use the short only stop? The 50. Yes. Oh, yes. So Lewis is asking a good question. Lewis wants to know about how we do these stops. So, yeah, Lewis, on all the 6 trades a day. See if I can get a thing here. We do a 50 stop, right? 50 wings. So we're always going to buy on these, for example. What we're always going to do is, this is a $3. So $3 on the short put and $3 on the long put. That's what we're going to try and get. Let's see if I can get my hands over the right way. And so then it's multiple entry iron condors to M. 95 is the stop loss, right? And then 50 is the wing. So yes, we always use the stop. The stop is only on the short. That is correct. Lewis asked a great question. Why is it that we only put the loss, why is it we only put the stop on the short? And let me explain that to you. All trades for options in SPX are handled by the Chicago Board of Exchange, the CBOE. The CBOE only handles single-legged trades. So you can only sell a put or buy a put, sell a call, or buy a call. That's it. It's only 4 different types of orders. They don't take multiple legs. You can only do one order at a time. But you say, Rob, but I trade multiple legs all the time. I trade iron condors, which is 4 of them, right? It's going to be a short put and a short call, a long put and a long call. That's the iron condor, 4 legs. I put that all the time. I put that in all the time, right? If I go to Tasty Trade, and let's just say that I go to, our good friend Amazon, let's say, AMZN, right? So I go to Amazon, and I'm doing the typical Tasty Trade is going to be 45 days, and I want to put on, if I go up here and say, well, give me a iron condor right here, boom, and I want to be a short iron condor, go, right? So boom, here it is, a 4-legged trade. And you're telling me they only do 1-legged trades. How is that possible? Well, it is possible because what happens is when you put on a 4-legged trade like this, that is Tasty Trade is going to, it's going to CBOE and getting the prices for all of these legs, right? And it's trying to find a combination where the spread is actually between $3.60 and $4 of all 4 legs. So what it's trying to do is to get all 4 legs of these to match up and then to send the order and get a fill at CBOE. And that takes time, and there's going to be slippage, and you're not going to get quite as good a fill. So if you said, well, geez, all I want to do is I just want to get this short put, right? Or at least I just want the short put and the short to get these out. Well, you don't want to do them 2 of them because, again, CBOE won't take them, and now you've got more slippage. So let's just, boom, take one out. Now you're sending one in. Now the CBOE is interested, and they will take it, and they will take the stop loss on that. And what the stop loss says is if you sell it for, let's suppose that you sold this for $3, right? Let's say, better yet, let's suppose you sell it for $2. If you sell it for $2, then and my stop loss is 100%, that means I'm willing to lose 100%. So you got $2, and you're willing to lose up to $2. Well, to lose $2, you put in a $4 stop loss, right? Because you lose the $2 that you got when you sold it, and then you'd lose an additional $2, so you put in a $4 stop loss. So the idea is you sell it for $2, and then if it goes up, the market goes against you, and this goes up to $4, it stops you out, right? So the way the CBOE works is first in time, first in right, and retail traders go in front of industrial trader or institutional traders. And they mark each trade. They know whether it's coming from a retail trader or institutional trader. So what happens then is that they're going to say, well, your $4, say that we put this on right now, it is 1048. So we put this on at 1048, right? You're a retail trader, that goes to the top of the list, unless there's other trades in front of you. But let's just say you go to the top of the list and you go in front of all prior institutional traders, all of them that put them on days ago, you go in front of them, and the only thing you go behind is other retail traders, and you're there. So now the market crashes, right? We're down 607, and just say there's some gigantic announcement, China just blew up Taiwan or whatever, and it drops 1,000 points. So as that market drops and it's going to hit your stop loss of $4, when it hits your stop loss, you don't just get traded at $4. What they say is, and we do market stops, right? So we'll take the market, whatever the market price is, the second it hits our stop. So it goes down, 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 down. It's $4. Boom, we'll take it at market. Well, it doesn't work that way, because when it's going down fast and it says, boom, $4 in milliseconds, that market is moving quick. Remember, CBOE, they track 10,000 segments to each second. It's called a millisecond. And there's lots of trades that happen every millisecond. So as that's dropping $4, and 2 milliseconds later, it's $4.50, and 2 milliseconds after that, it's $5 because they just blew up Taiwan. Down it goes, right? And when that happens, you want to be first in time, first in right? Because you want to get that fill. And when it's happening, people that are buying you back, there aren't a lot of them out there. And so you want to be in front of the institutions, but you want to be in front of the other retail traders as well. So if you put in a put credit spread, that's going to be held by Schwab, by IBKR, by Tasty at the brokerage. And they're going to watch. It's going to say, oh, it's under $4. Then they're going to send it to the CBOE. Now you're behind all those other traders and milliseconds have passed. So you're going to get filled at $6. If you had gone to Tasty or Schwab and you'd put that in as a single order, just on the short, right? Just on the short only, you would have been resting at the CBOE. So the second it hit 4, boom, you would have got in. You probably get filled at 425, 450, something like that, right? So I see Tyler and Maria putting on more trades. So that's why you want to be there, to avoid those gigantic drops. And something else I want to tell you is that it is not always the case that you're going to get, a fill underneath your price, because it could hit $4 and it could instantly bounce back. A lot of times I got a $4 stop and I'll get filled at $3.80, because what they do is they take first in order, first in time, right? And you're going to get filled there. You also have to be talking about your broker. You need to find out from your broker if they're resting the market stops at the CBOE or not. IBKR does not. So IBKR, if you put in, put credit spread or call credit spread, all the exchanges hold it at the brokerage. If it hits $4, they then send it to the CBOE, and they send it as a package of 2. And the CBOE will only they send it as each one individual, but Tasty or Schwab, they need to get a fill on both of them. So if you have a 0 bid long, that's another problem. You're never going to get a fill on those. And so then your short will never get sold. And will never get bought back, and you're in a world of hurt. So what we want to do now is we want to talk about IBKR. They hold them and they try and offset them against customers first, and then they send them to the CBOE. So if I went in at 1048 and we get stopped out at 2 o'clock, you're coming in, but IBKR tries to do it against a customer. They can't, another customer. So then they sell it in. It's going in at 208 in the CBOE. I got in at 1048. I'm going to get a much better fill than you. Also, here's something else that you have to think about that happens all the time. From your computer to Tasty, Schwab, IBKR, whatever, there's internet connection. Your computer might be down. They might be down, the connection with them. Now, from Tasty, Schwab, the broker, whatever, IBKR, they have to go from their offices to Oprah, which is what manages their order flow, and then it goes to the CBOE. All those connections have to be good. If any of those connections are broken, you're hosed. You say, well, how often does a broker go down? Quite often, actually, more than once a year. And so even though like Schwab, I think it was down 6 minutes, Tasty's been down about 12 minutes this year already. And we're only in, the third month, really only 2 months in. So it happens. It's not often, but it happens. So if the parade of horribles happens, Tasty goes down, Schwab goes down, IBKR goes down, or just the lines between them. It's not even them. It's the lines between them, whatever. Those go down. It happens, right? I have all my stops resting at the CBOE. So if all those places go down, I don't care. The CBOE already has my stop loss order. If you're doing multiple legged stops, you are relying on all that happening quickly in milliseconds. And even if it's connected, if it's slightly slow, you're hosed. You are in bad shape. So you want to have the single-legged order. So when you ask that question, Lewis, that is a heck of a good question. It's a lot more complicated than people think. I like to say, pardon me, this is like chess. I can teach you in a half hour how to play chess. I could never teach you in a lifetime how to master it. So yeah, I can teach you how to do a put credit spread or a call credit spread or a multiple entry iron condor or exponential moving average. But once you understand it, once you do the millions of back tests, once you determine your best trades, once you figure out how to do bots, once you load up your bots, then it's a matter of execution. And execution, like everything, is, when I was a lawyer for 20 years, right? The devil's in the details. It's always in the details. I ran, I started out in my garage, an internet company that I took public for hundreds of millions of dollars, okay? And during that course of time, I learned that the execution is really critical. When I started e-college, there was a bunch of software. And, I would meet with Mark Cuban and Steve Ballmer at Microsoft and Cuban at broadcast.com. And we would set all these things up. And it was a real heyday of the internet at that time. But it all came down to execution. So like Mark's idea was, well, we'll take TV channels and put them on the internet. Yeah, that's great, but you got to have the execution. It's got to look good, sound good, that kind of thing. And Ballmer had the same thing. He had real audio. And like I wanted to put college professors on the internet, and I wanted to teach on the internet. Microsoft had a bunch of tools, but audio and video was really where it was at. And because, pictures worth 1,000 words, that's the whole idea. And my whole idea was getting this all to work. And it all came down to execution. And I used to tell John was my chief technical officer, 24-year-old Jewish kid, put the first website for the Pope on in the United States. And I thought, hey, 24-year-old Jewish kid can put on a website for the Pope. That's the kid I want working for me. And he was great. And it's still a great friend of mine. And what John used to do is I used to say to colleges, we're going to do this and this and this. And John would say, we can't do that, Rob. I said, well, John, you're fired, right? You're fired. He goes, fired? I just started. I've been only here 2 months. I said, well, if you can't do it, what good are you to me? He said, well, I can do it. It's going to cost a lot. I said, I don't care what it costs. I'll pay for it. I just want the thing to work 100% of the time. It's all about execution. Because I would go into the colleges and I would say, we're going to do this and this and this. And there's always sitting on the shoulder of the president, right? There's always a computer science professor saying, well, we can do all that. We can do all that. And the president said, well, my guys say they can do it. I said, great. We have a downtime of less than a minute a month. What's their downtime, right? Well, their downtime was, hours, days. So back then. So the idea was, it's all in the execution. Yeah, anyone can do it. Maria and I made $4 million our first year selling options, right? People say, well, anyone could have done it. Yeah, anyone could have done it, but people didn't do it. Sure, anyone could do it. Anyone can do it if you just did exactly what I do. Anyone could have made $400,000 with $1 million since October 1st if they just followed exactly what we did. But we're the ones that did it. So it comes down to execution. You really got to have the execution down to a science. And that's where the devil is. That's the devil's in the details. All right. So enough soapbox by me. Don't let me get carried away. But Lewis raised a good question. So how do you close the long leg after the short's been filled? Oh, look at Lewis coming in with the big questions. I love it. All right, there's 2 ways. Number 1, do it manually, right? First of all, just 3 ways. First, just let it expire. A lot of times they're worthless. A lot of times, if we're in the SP, let's go take a look at the SPX, right? And we're going to go to 0 DTEs. We're going to say, let's suppose that right now we're trading and we're trading like a $3 150 wide leg. I can't get it up on my screen. So let's just do 50. Let's do the math, 50 wide wing, right? And so let's say that it's a 100% stop loss. This goes to $6. Boom, we're out. Now we got this long leg. We can let it expire, but it's worth $100. Now, if this goes down, this is going to be worth a lot. It might be worth $200. So what I would do is close them out manually. Just close them out manually. Easy enough to do. And if you're inside, if you're not out surfing and swimming, you can do that. You can also do what's called OTO. Let me say it again. I got to get this better. OTO. Okay. One triggers the other. So you put in an OTO order on Schwab, for example, and you say, whenever this short gets stopped out, I want you to immediately sell the long. I want you to put in a market order, right? So we got a market stop loss at the CBOE. That gets triggered, right? Market's crashing. This put gets triggered because it pops up, went from $3 to $6. And now we've got this long, and it went from $1 to from $100 to $200. And so we want to sell this long. Okay. So they can't have both orders on at the same time, and you don't want to get rid of the long because look, without the long, if you take this long and you delete it out, right? Now you've got $92,000 worth of buying power. There's no bueno there. You don't want to do that. So that's the reason we put these things in here. Now look at the buying power now, $4,800. That I can live with, right? And by the way, a tricky little secret, if it's 50 wide, the max buying power is $5,000. If it's 100 wide, the max buying power is $10,000. If it's 150 wide, the max buying power is $15,000. Yes, I talk fast. You can always go back and re-record this or slow it down and back it up. But I'm giving you a lot of information here. What was the question here? I see. No, Relena, but so Lewis, do you close the long line? Oh, yeah. Okay, I get confused. So one triggers the other. Pardon me. So if this gets punched out, if this goes to $600 and so you're going to lose $300, so we got it on for 300, we had 100% stop loss. And this went from, it was $1, I think, when we were first looking at $100, and now it goes up to $200. So we want to get that $200. We don't want to just let it expire worthless at the end of the day. So what we're going to do is we're going to have one trigger the other, which says if this gets stopped out, immediately enter a market order and send it over to the CBOE, and let's get out of this long. Let's sell it for as much as we can, get as much credit as we can. So number one, let it expire worthless. Number two, sell it manually. Number three, OTO order. That sounds great. Again, what did we just say? It all comes down to execution. Here is the problem that you have, is that Tasty Trade only allows you to do 4 OTO orders a day on any one particular equity option. And the reason they do that is because they don't know how your buying power situation might change during the day. And if they accept the order, they can't cancel the order once you put it on. So once you put on the order, they're stuck with that order, even if your buying power gets way cattywampus or upside down. Schwab is not that way. Schwab lets you put an unlimited number of OTO orders. So if you want to do the OTOs, that's why I trade the $30,000 account. We do 2 accounts all day long, every day when we're doing the 0 DTEs. We do the $1 million account and we do the $30,000 account. And the thing I want to mention is that on the $30,000 account, we trade that one in Schwab because these longs are going to be a lot more valuable. When you're doing 150 wide long, I mean, look, you take this out, what are we trading this one at? 66. So we were looking at for 6,500s, right? 6,500s. 6,500s are, those are trading for, $20. They're trading for nothing. So, that increases our buying power from 5,000 to 15,000. But if you got enough buying power, this is why it's to your advantage, why you don't really have to worry about the OTOs nearly as much. And that's why I put the the bigger account in Tasty. Now, Tasty will let you do 15 OTOs during the day if you have portfolio margin, right? So if you're a little bit bigger account, they'll let you do portfolio margin. Let me drag this closer to where we were. So, and by the way, if you have a real small account, you can tighten up these wings. You're not going to get as much profit. Remember when I was showing you what we were getting here, I was showing you on the payouts, right? Is that if you're doing the 150 wide, I'm capturing about 10% of the premium, which is great, really market efficient. If you're doing 50 wide wings, it's about half as much capture rate. So that's the problem when you have the tighter wings. Again, everything in the market is set up against the small trader. It's all set up in favor of the big trader, except for the single stop loss market orders at the CBOE, the small traders go in front. When it comes to futures, by the way, that is not true. When futures options come in, it's totally 100% for the big boys because they're first in time, first in right. So that's the way that all this works. And that's how we set up what we set up and why we set up what we set up. Now, that's a lot more detail than I give in other videos, but it's a great question. And that's why I like this chat room. So let's see what Lewis has said. Lewis says, thank you, Rob. Yes, the strategy is strong as its weakest point. I'm with IBKR, so thinking of ways to make it robust. Yeah, I would check, Lewis, and if you would put it in the chat in the Discord, check with IBKR, and if you got a guy there or gal, I think it's, first of all, it's always important to establish a relationship with somebody at the trading desk or at tech support. Usually that's the same thing. The trading desk people are the smartest people at the company. They're the ones that actually put on the trades. Most of them were in the pits at CBOE. They certainly are at Tasty, and they certainly are at Schwab. And so I've established a relationship with a person at each place, somebody I want to get their cell phone number and their email address. I want to be able to text them or call them, because when the market crashes, tech support's got an hour wait, right? So you want to be able to get to somebody right away. But ask them, and IBKR is going to get a little bit uncomfortable when you ask them, say, hey, look, I want to do, now, Lewis, listen very carefully. Anybody at IBKR, listen to what I'm about to say very, very carefully. Rewind it, because these are the exact words you want to ask them. I'm trading 0DTE SPX. When I put on a trade, I want to put on a stop loss market order on the short leg only. I want to put a stop loss market order on just one short leg. Is that order going to rest with the CBOE electronic book, or is that order going to rest at IBKR? And I believe, as a retail trader, I believe their answer is we hold those at IBKR, and we try and offset them against other customers in order to get faster execution. If we don't get an instantaneous fill, we route it to the CBOE. And we will show you what our latency reports are. Well, of course, the latency reports are going to be very good, because they're doing millions and millions of trades and everything's working great. IBKR to Oprah to CBOE, always nice, beautiful, 99.999999% of the time, everything's connected. Great. The more important issue, and they show you those latency reports, that's great. And I love IBKR. I'm not poo-pooing on them. It's just that I choose not to do this because it's all in the execution, right? This is an executional risk that I don't care to take. So, and maybe you say, well, Rob, I'm not worried about that risk. Okay, that's fine. That's up to you. But one thing I would look at is, what is that latency when IBKR is down? Well, we're never down. Okay. You've never been down. In your whole history, you've never been down. I find that hard to believe. What about when the communication line is down between you and Oprah? What about when Oprah is down? What about when the communication lines between Oprah and CBOE are down? All those things happen. They don't happen often. They're not probable, but they're possible. They do happen. And when they happen, you can be severely damaged. If you don't have a stop loss, now it has to happen. It has to be a parade of horribles. I get it. They're going to say, but. You'd have to have it go down at the same instant the market is crashing. That's correct. That is 100% correct. That is what would have to happen. But I've seen it happen to other people, not to me, that people have come to me and said, oh, Rob, either you're lying, Rob, about your success, or I did something wrong, or you're not doing what you promised you would do. And I say, okay, well, let's look at your trade logs, like my trade logs. And almost invariably what happens is that you see that they tried to do a put and a call together. You know what? This market now, it's only down 475 points. I got some bad news for you guys and gals. Bad news. The Qs are coming back. I'm sorry to report that. Nobody wants to hear it. Nobody wants to see it. But these are coming back. And if they're coming back, it's highly unlikely we're going to get a fill. So, okay. So what's going to happen, though, is if it is the case that you are down, you are hanging out there. You are unprotected. So if it does happen to you, you can lose 10,000, 100,000, whatever. It can be a lot of money because we're taking a market order, right? And so, well, first of all, there's not even an order sitting there on the book, on the CBOE book. So they don't even know that you want out. All they know is that you got a short leg and you said, well, I'll take the risk. I'll just hold on to it. Okay. Well, let's take a look at that SPX risk. So we put on that $3. What we put that on at 67, was it 67.50? I forget what it was. 67.50. Let's call it 6,800, 6,700. So we put that on. Now all of a sudden the market, the SPX is going to drop 200 points. So it's going to go to 6,900, right? So it goes to 6,900, and Right now, that's trading at 143. So that means you're going to pay 14,000, but it's actually going to move more than that. So it's going to go to 6,900, and by now 6,900 is at the money, right? So it's going to go from $3 to at least $1,800, and probably going to be a lot more VIX and whatever. And also, there's going to be nobody at the market. You know, you're going to be up to the whims of the market. This spread is going to open up huge, and you're going to have a gigantic loss. And there's nobody there to protect you. And who knows? It's just going to keep going down and down and down. You might get a fill at 100, 10 grand, right? And so if you get a fill at 10 grand, what are you going to do? You got a $300 credit, and now you got to pay 10 grand for every contract that you got. And that's because they never got your stop loss order because it was being held at the brokerage. And that same thing, when people come to me and they say, well, you won at a certain time and I lost, or you lost, it's typically this, you got out, you got 100% stop loss and you got out at 105%. I got out at 600%. Why is that? Because you put it on as a credit spread, right? You put the stop loss on the spread, not on the short. That's the difference. It's just that simple. Execution. It doesn't happen often, but it does happen. And it even if you have everything's working great, if you have it at the broker cannot, it's impossible for them to look at both the short and the long leg and to execute it as quickly as my short leg alone at the CBOE gets executed. It's just not possible. It's not physically possible. So execution is important. Pardon me. How you buy back those, how you sell those longs is important, right? OTO or manually. I can go surfing and swimming during the day because at 150 wide, almost all my longs that I put on are for $5. And so I'm willing to let $5 go. It's not that big of a deal. And during the wintertime when I'm home, I will, I like to sell them for $10 and I'm a little bit greedy. But if I can't get $10 afternoon, I'll just take $5. And, you get 20 of them, $5, $100, pays for dinner. That's the idea. You can do that every single day, $100 times 250 trading days a year. I don't know how much that adds up to, but it's something. Is that 25 grand? I mean, that's real money. The first year I was a lawyer, I got paid 21 grand. So, granted, that is back when we were using stones and chisels to write the laws, but it was a long time ago. This doggone thing, look at this mess. So, unfortunately, this is coming back, guys. So we're not too excited about that. What time? We got 11:10. I'm sure you don't want to hear me blather on or more and more and more. It doesn't look like we're going to get a fill on any of these darn things. And my CLS is coming back. So Maria will be happy to know. She didn't like roll it the first time. If you weren't here earlier, if you are going to, this is an earnings trade. And I was up like $200-300. And I just wanted to let it go all the way to expiration, thinking that I would never violate the 250 rule. So what happened, if you go over here on Tasty, you can hit this little thing, which is chains. This is the order chain, right? And so this will show you that I put this on January 28th, 17 minutes before the close. And the thing was trading at about 340, I think, or 320. So I thought 280 would be safe. I got paid $600 for that, $6. So my effective cost is I got paid $600. So it then came down to 281, 282, and much to Maria's chagrin, I rolled it. She said I should have waited till it was in the money, which it never did go in the money. And so I rolled it though on February 4th at 11:25 a.m. I rolled it from 280 down to 250, but I rolled it out from, it was more like 40 days, I think, at the time, and I rolled it out to 64 days, whatever. I got paid 175 more bucks. So my basis here is $7.75. So to the extent I can get $775, that's my max profit on this trade. But right now, because it's close to 250, I'm in a losing position. But look, if you go to my positions here, it says, "Oh, Rob, you're winning. You're up $145." No, I'm not. Why does it do that? It does that because it's only looking. Tasty is only looking at this one transaction, this one put. It's not looking at the whole order chain. But what Tasty does, which is kind of nice, is they put a little thing that says OC right here, and that means order chain. So you can see where are you really on this thing. Really right now, if I was to, I don't want to roll it, if I was just to close this thing out, where am I, right? If I say, well, am I up 125 bucks? No. They would say, no, you're not. So if you close it right now, you'll be down, you'll lose 885 bucks because this is the order chain, right? You can take the order chain off. You can say, oh, I'd make 130. No, you wouldn't, because if you look at the whole order chain, you'd be down 885. To see how that really works is you'd see that I got $6, I got $1.75. So I've got $775. But to get out right now, it would cost me $1,660. So my loss would be $885. I mean, it's pretty straightforward how that works. And you can see very clearly that Tasty Traders made it really, really simple for you. But I'm just cautioning you, don't be fooled when you see that you're winning, because you're not winning, you're losing. And look, I lost $500. Maria was telling me to close it yesterday. Still, I'm $4 out of the money. If this gets down to 250, I'll just roll it down and out. And if for those of you that were wondering how you roll it down and out, you just go to expirations. I'm going to go out here to 417. I want to actually go one more expiration. See that it's at 417 right here. I'm going to go one more expiration to May 15th. And now it's going to give me a $18 credit. I don't need the credit. I want to go down to get protection. So I want to take this down. Watch this. I don't want a debit, right? So I'll pay it for a credit. And $1.05 credit. It's the first credit. That's what I do. So, I've been going down 18, 13, 8, 470, $1.25. So I'd get $125. I would move it from March 20th to May 15th. So I move it out about 60 days. But most importantly, I'm going, you know what? You can't see that. So I need to clean this up so that you can see it. Let me move my smiling face. So now you can see I'd be moving this from a $250 strike price down to a $210 strike price, right? So that's going to give me a lot more leeway, a lot more time to be right. That's the whole game here of rolling down and out. It's the same thing we do with the Crazy Ivans. So let's take a look at the Crazy Ivans in the NQs and see how we're doing there. Let's go over to positions. So, okay. Now, these are the Crazy Ivans that we have. We have 1, 11, 20, 24 of them. I can have 65 maximum. They're about 15,000 in buying power each. My account, I only like to use 30% of my buying power to do Crazy Ivans. For those of you that are new to our channel right now. And so 30% of that, of this particular personal account that I have, is about $1 million, is 30%. So what I want to do is take $1 million and divide it by 15,000. That comes up to right around 65 Crazy Ivans I can have at any one time. A Crazy Ivan, all that is a naked put. Close this out. It's a naked put. We want to be in the Qs. It's a naked put that's going to be 45 to 60 days out. So I'm going to look here, 45 days. This is a weekly. I don't like weeklies as much. Again, you can't see it because of my silly face. So I'm going to move myself over here for now. So I can see 45 to 60 days, and I don't want it. I don't want 45 days because this is a weekly with the little, here you can see it. You see my little mouse now. So this is a 45-day weekly. This weekly is not going to have as good a spreads, not as tight, and won't have as much open interest. So it makes it a little bit harder to get in and out. So if I can do it the end of month between 45 and 60 days, I will. So that's 58 days. And so now we're going to move me back over here. So I'm out of the way. And we're watching this. Qs are now only down 435. So what I would do then is I'm going to go over here to my account, and we're going to look for 12 delta, right? And so 12 delta, I like the thousands or the 250s or the 500. So this is 12 delta right here. So I want to sell a naked put, and I would sell this for, they're offering me $4,000, and it's using 13,000 in buying power, not quite as much as it was earlier today because the VIX probably is coming back down. VIX is just a measurement of fear. That's all. More fear, the more they're going to pay us in premium. It's a wonderful thing. That's why we love red days. The more down it is, the better. We're going to get more premium. So I'm going to go ahead and sell this. And Maria always tells me, don't sell it for the midpoint. Sell it for two more. So I go 1, 2. So I would sell this for 253 or let's call it 250. And I always add in half a point for my dog because she likes treats, toys. And so I like to add that in for Barbie. And then I would go ahead and I would put that out there. And that is a order for a Crazy Ivan. We're going to take our activity. And there it is right there. So they're offering me $214. And I'm willing to say, no, I will do it if you're crazy enough to give me $250. And then what I would also do, I would go out here and say, okay, and I ladder these up. So now I'm going to say 260 plus 50 points for my dog, for Barbie, right? Put that order in. And let's just say that I want to do a super crazy Ivan and I want to do a similar. And now we're going to do what was last one was 260. So let's say 290, some crazy super high number, right? And we put that out there. So right now we're trading, the market's trading at minus 400 points. You can see those are the NQs. And you can see I just put on 12 delta. Now, granted, it's 12 delta right now. When the market went down, the delta is going to go to 14 by the time it triggers here, this 250. It'll probably be at 16 when it triggers this 260, and it'll probably be at 20 or 22 delta when it triggers this 290 if it keeps going. The idea is I want to keep layering these in, and I realize the market's not going to just go down, 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 down. It's always going to come back up. And so I just want to trigger in a couple, maybe I put in 5 of these, and because that's 5 for my DAX max. And I really, the next one I might put in, this one might be like 325. What's the chance of getting taken? Highly unlikely. But if the market does crash, super big crash, and sometimes I'll have these on here and it'll be there's a rumor, internet's great for rumors. There's some rumor on the internet, Trump just blew up somebody or somebody blew up the White House, whatever the heck it is. I don't care about the politics. Some crazy rumor out there and the market spikes down. I'll get fills on all those and whoop, it comes back up. I'm sitting on 25% profit, and that's the key because I'm going to get out at 25% profit. And I'm only not getting out at 25% profit lately because I'm greedy. And so these were at 50% yesterday, and now they're negative. They're coming back. It's down 400. If this comes back to even, I'll be up a lot. And this extrinsic this is how much money I could win if I stay out of the money. So I could win 115,000 plus 5,000, but I'm going to get out at 25% profit. So it's about a $40,000 profit that I'll be able to get. I think last year I made $500,000 or $600,000 on the Crazy Ivans. I don't quote me on that, but I'm going to say in that range. And then on the SPX 0 DTEs, we've made $400,000 on $1 million account since October. So in 4 months, we've made 42%, something like that, 41% on that one. Let's just take a look. You can see exactly. Here's what it is. You can see exactly what we've made. It's pretty straightforward. You can see that we've made $427,000 on 15,000 trades in 0 DT. We sold $4.3 million worth of premium and captured 10%. But you can see it's pretty straightforward. If you're new to the channel, I post every single day. You can see exactly win, lose, or draw. And I post, on Sunday nights, there's another thing. If, again, you're new to the channel, on Sunday nights, we post the trades for the small account. These are for the $30,000 account that we do. And then we post the trades for the big account. I'm going to do 120 to 200 trades a day in the $1 million account. We only post 20. We got to keep a little something for our family, for ourselves. So we don't post everything, but we post a lot of them. So you can see what those are. And if you want to get them, you can go back and we post those every Sunday night at 6. And then I'm live every day at 3:25. And I'll go over all that we're doing. And typically on those afternoon trading sessions, I'll win or lose $8,000 in the last 9 minutes. So it can get kind of exciting. All right. So we're a little bit depressed here because this has come back. The darn thing has come back up and it doesn't look like it's going to stop. And there must be some good news coming out. And so I'm guessing I'm not going to get filled on any of these things. And I know it's a trading show, but it doesn't look like we're going to have any trading. CLS is coming back. It's down 12. You can't see it, but here, let's see it. So you can see it's down $12 today, and we're down $500. But this is going to, it's going to come back. Looks like. So right now we're down $880. So if that 500 comes back, if this got back to zero, we would still be down $300 or so. But I prefer not to roll if I don't have to, because right now all I got to do is stay above 250 for the next 17 days, and all this extrinsic, all the $1,650 will come over to me, and I'll get a big fat check for one pair of shoes, as Maria would say. All right, so are there any more questions in the chat room? I don't know if anybody is out there. Did you know this, Maria? Here's an interesting fact. Maria told me the #1 highest paying job for last year in the United States is OnlyFans creators, people creating OnlyFans. In most countries, it's surgeons or financial advisor of some sort. But in our country, it's OnlyFans. Is that nuts or what? People pay me not to see me on OnlyFans, I think. So I haven't actually never been on there, but I've heard it's not not pretty sometimes. So we'll just leave it at that. This is supposed to be a trading show, not an OnlyFans show. So, okay, let's look at the Qs one more time. You can see where we are. I'm trying to get 270. They're offering me 214, 285, 214. This is a typical ladder that I have. Here's another ladder. This is, here's one at 21,000. I was trying to open a position. I apologize. I need to close this up a little bit so that you can see just, the only way I can do that. You know what? Let me just move this. How about that? Better yet, why don't I just, okay. So here you can see. So I'm trying to trade, I'm trying to get 270, 85, and 300, and they're just offering me 212. And then on this one, I'm trying to get 269. They're offering me 191. I'll probably never get a fill on that because now we're only down 400 points. We were down to 650. It seems like just a second ago, right? I mean, this was at 1030, and then we had another chance at 1051. And what time is it right now? It is 11:24. So, there's a chance. By the way, there's a reason why I didn't trade 0DTEs today, okay? I mean, look at this mess. At the open, we dropped substantially, boom, 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 boom. So all your puts got pushed out. Then we came back up. I want to be sure this is a 1-minute chart today, yeah. So all your puts got punched out, then some of your calls, then some more of your puts. And now we're getting all the calls getting punched out. This is why I don't trade 0DT SPX on news-driven days because, as Maria said to me, it's just common sense, Rob. It's just common sense. Don't trade on these. And it's not that common. And this is why women traders, I know my grandkids, Grandpa, don't say that women traders are better than men. There's no difference between men and women. Well, I've had kids and I've had grandkids. And let me tell you, there's a gigantic difference between men and women. You give my boys and my grandsons a pencil, it is a spear, and they try and stab each other or try and stab the cat or the dog. If you give any of my granddaughters or daughters a pencil, they'll draw me a pretty picture of a flower. So maybe there's no difference, but in my experience, there has been a difference. Men are hunter-gatherers. They have a goal. That's why they love sports, right? And they are going to trade for the goal. They're going to say, oh, this is going up. I want to get it up here and set the record and get it. Women are not that way. Women are more methodical. They take their time. They have a plan. Women don't go to the bathroom without a plan. They got up, and I know people are going to get all upset at me for saying these things, but that's my experience. Women are way better traders. Maria's a way better trader than me. She's much more cautious to go in. She's much more cautious to stay in. She's much more cautious to get out. She doesn't trade. If you gave us both the same amount of money, she would do a lot fewer trades and probably make more money. I might, on some occasions, shorter periods of time, make money. You know what? I wonder if I have a kill switch. Kill switch. Oh, I don't know. I don't know how that works. But she's going to make more money in the long run because she's much more methodical and thinks it through a lot more. Men get carried away. They get stuck with these visuals and they get carried away. So one of my points I make to people all the time is trade with your spouse. I mean, especially for 90% of the people that watch this channel are men. Trade with your spouse or significant other or some other woman or man. It doesn't matter to me, but the idea is hold yourself accountable, either it's to your kids, your grandkids, your parents, your partner, even your friends. Get in a group chat, and every single day at 4:05, I text Tyler and Maria, and now my CPA, how much are made or lost in 0DT SPX. And no matter how much I make, they still don't believe that it's going to work, right? They don't want to look at the math. I know that it will work because of the math and all the back testing I've done. But you know what? They're coming around. After making $400,000 in 100 trading days, they're saying, geez, maybe there is something to this. And the way they do it, the reason I do that is that people remember the losses much greater than they remember the wins. Ask any trader, do you remember your biggest winning days? Probably not. Do you remember your biggest winning days? Oh yeah, they all remember those. I keep a yellow sticky tab. If I have a big losing day, I keep a yellow sticky tab on the bottom of my computer that reminds me why I lost that day. And most of them, in fact, I believe all 7 of them are because of my stupidity. I did something stupid, and I just don't want to repeat that. If we don't learn, we're not going to get better. So, how much, and I always put down on the little sticky cat, how much did it cost me? My biggest mistake was $600,000. So I understand mistakes, right? I've made them. I own it, right? I want to own those mistakes. But that's how you learn, and that's how you stop from repeating those mistakes. At least that's the idea. So doggone it, this thing's going up, and there's not much we can do that. I appreciate you sharing your knowledge, Lewis says. Love the show. Great. Thank you very much. I hope that none of you out there have an Onlys fan, or what's it called? Onlys fan only. I don't know exactly the words. But you know what? Let's get these trading accounts up. I hope you guys are doing well. Hey, is anybody out there, how have you guys been doing since the start of the year? I had a pretty, I made, on SPX, I was looking at this the other day because I'm getting ready to do a video on the first 100 days. In October, we made, don't quote me on these exact numbers, but I'm going to say 80 grand-ish. In November, we made 70 grand. In December, we made 147,000 grand. In January, we made 2,200, right? Still winning, but 2,200. In February, I want to say we made 30 grand or something like that. So let me just take a quick look. See, I don't know if we can we might be able to figure it out by looking at the chart. So it's hard to read it. And it's hard to tell the dates, but that's generally what we in those things. So hopefully you guys are all making money. We were up pretty good in February, but I can't tell from this chart the exact dollar figure. I'll get that. Let me tell you, hey, so you want to know some cool facts? Here's some cool facts. The people you see on the internet, all the time on the internet, I see these gurus or people telling me, oh, this is a myth, right? Here are all the myths. I have 20 myths about zero DTE trading. I'll give you a preview of coming attraction. Number one myth is Thursdays are always down days. Don't trade on Thursdays. Zero DTE is bad. Okay. My second best day is Thursdays. My second best day in real life trading, Thursdays. I don't know what to tell you. I understand, small sample. It's only 100 days. I get it. Thursday's still the best day. Second best day, right? Thursday's second best day. Trade at 9:32, the minute it opens, is the best moment to trade zero DTEs. You have the most people in there, the most volatility. You get paid the highest premium. Totally false, right? Turns out the best time to trade is in the 10:20 range, the 10:20. You got to be careful about the magic minute. But if you I like to look for 7-minute ranges. And if you're looking for that 7:20 to 7:27, right now, here's the other thing. It changes. The reason we back test every single week is because the herd of sheep that are selling premium, they're moving around. They might be watching this show and they're going to move around, and we just want to be away from wherever they're selling. We want to be where they're not. So it used to be the 12 to 1 o'clock hour was terrible. Now 12:07 is the best time. 2 weeks or 3 weeks, maybe 6 weeks ago, 15:51, 9 minutes to go. 9 minutes to go in the day was one of the best times we had, right? 9 minutes to go. Now it's not even in the top 20. It is a moving thing. Like people say, Rob, why do you give away the trades? I said, well, first of all, they're like bananas. They expire in 5 days. The information, you're giving all the information for free. So far, yeah, right now I am. I might charge someday. You don't know. It depends on how, what my grandkids need for work. They keep telling me I should charge for these things. You never know. But right now I'm giving away for free. Absolutely. But I know that the information I give you today is worthless next week. And the farther we get away from today, the less value the trades I give you today are. That's why one of the things you'll hear me talk about in this channel is I really hate it when you just copy my trades. I much prefer when people say, Rob, I watch your videos and I'm learning how to do it myself, right? Isn't that what Jesus said? If you can give a man a fish and feed him today, but if you teach a man to fish, you can feed him for life, right? Or man or woman, whatever. And so if I could just teach you how to do this, right? If I can teach you how to do back testing, if I can teach you what the math is, if I can teach you how to take the trade logs and run it through AI and do the profit loss statement, the max drawdown, the compound annual growth rate, the MAR ratio, the Sorrentino ratio, whatever, I forget all the other ratios that we have, our internal ratios, and you can figure those out. You can figure out what are the best trades for, the stop loss, the premiums, the profit targets for you, which ones are the best for you, the wing widths, all that, what's best for you. if I can teach you how to do the bots, how to put the bots on, how to manage the bots, if I can teach you how to execute the trades by single order stop losses that rest at the CBOE and how to do OTO trades, if I can teach you how to do that, you don't need me, right? Then we're just having a discussion about, well, what's working for you, or you got some other new ideas, or then we're out there looking for not just multiple entry iron condors and exponential moving averages. We're looking for new types of trades, new types of things that we can put on. How fun would that be, right? How great would that be? We can all learn. We can all be better because, man, we are fighting the big boys. We are fighting those gigantic hedge funds. Hedge funds are the enemy, right? Hedge funds are trying to screw us all the time. And so we got to figure out, we got to build tools where we can beat them. We got to get in there, get our money, and get out before they will run away and they can't get us. We're going to get in and get out. Quick, surgeon. And that's what we want to do. And we want to do that over hundreds of times a day, 15,000 times in 4 months, right? That's what we want to do. And together we can do that. We can do that. And we do more, we're not doing opening range breakouts right now. We're not doing reverse iron condors. We're not doing double calendars. We're not doing strangles or straddles. We can do all those things, right? We can back test all those things. And options, we are at the tip of the iceberg for what Options Omega has for back testing, the tip of the iceberg. And now we're getting, Amazon, Microsoft, Oracle, Google, all these other stocks that are trading zero DTs 3 times a week. When zero DTs first came out, the profits were huge compared to what they are now, gigantic, right? Because of the way the system's set up. Well, all of those are in the early stages. All those stocks are in the early stages, and that's all in Options Omega. We can back test all that stuff. So we just need to get our act together and start working as a team, and I think we're going to do great. That's what I think. So, okay, off of my soapbox. Now you've done it. You got me excited. So anybody new to this channel thinks I'm a nut job, right? So remember what our little thing here is: no zero DTs today. Trade crazy Ivans. And I did put out a video on that earlier today that you can watch when this is over. So I was hoping we might see a huge down dip in this, but unfortunately now, we're not even, look at this. We're not even over we're not even 400 up, we're not even 400 down. It was 650 down. So we're not going to get any fills. I think I'm going to call it a day. I really appreciate you guys. Thank you very much. It is huge to me if you could subscribe. If you could go through all my videos and hit the like button, that would be great. Any comments you put down below, that hugely helps trying to get YouTube. It tells YouTube that people are interested in what we're doing, and it sends it out. It sends it out to more people. And that's what we want to do. We want to build this community. Go to the Discord. I answer almost all the questions in there. Put your questions in the video below. I will answer all those questions below. I'll see you tonight at 3:25. I'm going to do one more check in the chat. I don't see any more questions. I know it takes a little bit. And you know what? I always say 3:30. I come on at 3:25, just if you want to know, because I got some trades to come on. We've been on, I think this one. Are you kidding me? I forgot to record this. Oh, well. All right. Thank you guys very much. I really appreciate it. I will see you. Maybe we'll get Maria on here today. I don't know. Probably not, because she's going to be worn out. I know she was trading almost all night last night. And we'll see if I got to get Tyler. If you could put in the comments more Tyler, that would be great, because I would love to get Tyler on here and to do some scalping. He makes great money scalping, and I am just not nearly as good at it as he is. So, but it takes a team effort. He also trades some stocks that I'm just not that familiar with. Okay. Thank you very much. I blathered on long enough. That's the end of the show. We will see you guys tonight at 3:25.